was also thinking, you're talking about the tax rate and the qualitative factors as well. When I think about also the business model of the corporate, you're talking about if you're aiming for more, more China exposure, or one that naturally set up in Hong Kong. If you want to be in more Southeast Asia, you're in Singapore. But I guess you were showing me one example of a company that has treasury operations both in Hong Kong and in Singapore. Could we maybe bring up that case study if that's okay?
That will be the last slide.
The next slide, please.
Yeah,
yes.
Yeah. Okay. Now this is an interesting example. The question is, do you set up one treasury management center? What if you already have a treasury management center in Hong Kong? Do you set up another one in Singapore, for instance, or Malaysia for that matter? I think the question is that how big is your operations, or how extensive would your operations be in Southeast Asia? From our observations, for those companies that have extensive operations in Southeast Asia, Malaysia, Singapore, Indonesia, Thailand, all this, the tendency is that perhaps there is room to consider two treasury management centers, one to cover North Asia, one to cover South Asia, for that matter. Because the financial markets between North Asia, South Asia is very varied. Sometimes it may be rather difficult to actually manage everything out of one center itself, right? And the banks itself are also varied, okay? So you have a set of bankers in North Asia who is familiar with North Asia, but banks in North Asia may not necessarily be very familiar with the geopolitical situation in South Asia or with the operating environment in South Asia. So you may need to have a different set of bankers there. So if you're dealing with two different set of bankers, it may mean that it makes sense to have people who are familiar with different territories. Hence, you go that way. And this is an example of a client we have. They are actually one of the top 3 or top 5 players in the pulp and paper and the CPO market. They are fully integrated, meaning that upstream, downstream, all the way, right? And they have operations, mills, plantations mostly in Malaysia, Indonesia, right? And their mills are in Malaysia or their factories and so on. They have in Indonesia as well as in China. China is a very big market for them as well. So this is a good example of how they have sort of organized themselves in that when it comes to the treasury management services, they are actually in both Hong Kong as well as in Singapore. Okay, and so the Hong Kong side deals with North Asia bankers, and they do centralized treasury, raise fundings, forex, and all that with the bankers in North Asia. And for their operations in Southeast Asia, Malaysia, namely Malaysia, Singapore, Indonesia, they have a center in Singapore, and they're actually looking right now at establishing a center in Malaysia as well. So the Singapore one is the Treasury Management Center, and in Malaysia they are looking at going under the Principal Hub program to house the regional HQ there, again for tax purposes, right? So that's how they organize, and it does make sense in that case because you optimize on your tax. There is also proximity to the market which they are operating because it's in Malaysia, Singapore, Indonesia, right? So, so those are considerations. This is a very good example of how what a regional company that goes out into this region initially may not be, but once your operations become big enough, perhaps there is one should consider whether or not you should set up an alternative management center in Southeast Asia for Southeast Asia operations.